Okay, welcome everybody. This is a historic day. This is the very first SpaceX earnings live stream. We'll be doing that today. It's co-hosted today between me and Ellie in Space. She has a YouTube channel. She follows SpaceX very closely. Ellie and I will cover this. And what we're doing today is right now, there's a pre-show. But this pre-show is very quick. It's only 30 minutes because in about 30 minutes from now, they will drop the financials deck. We will go through that in detail. One of the most important things we're watching out for, is it possible even that SpaceX can show that their earnings is positive as opposed to negative? Unlikely, but there is that chance. And of course, we're going to find out more about their businesses. And then half an hour after that, this is very quick, we'll actually live stream the actual official event right here on this channel and Ellie's channel as well. And then after that, we'll do a post-show analysis. So Ellie is our co-host. She's a SpaceX reporter. You've often seen her right there when the rocket is blasting. She and Joe Techmeyer are there interviewing Elon and even the family at the rooftop. You've got Jeff Lutz. He'll be joining us later, expert in manufacturing supply chain. Alexandra Mertz is here with us. She's board and governance. And then Aaron Burnett will be joining as well. He's here right now. He is one of the best financial modeling of SpaceX out there. Joe Techmeyer's here as well. He's an astronautical engineer. And then later we'll have Scott Walter join us, rocket scientist, actually. So we have the panel here with us today. It's going to be exciting. Let's start off with you, Ellie. What are you expecting? How exciting is this today for you?
Well, to be honest, this is definitely a little bit out of my wheelhouse, which is why I enlisted my husband, who's very financially savvy, to be a part of this call. You guys know that I report on SpaceX and I've been following them for many years now, but seeing the financial side of it, especially with this being the first earnings meeting as a public company, will be very interesting. I'm not exactly sure what to expect. But do you have any thoughts?
Yeah, I think that when you think about the company, and particularly in their S1 filing with their IPO, they want to present to the market that this company is basically broken into three parts. You have your space, your connectivity, and your XAI. And so I think for the most part, when we're looking at this earnings, I don't think that the space division is going to be all that interesting in the fact that I don't think they're going to say a lot that we don't already know. We know how many launches they do. We know how the last Starship went. So the market's kind of already figured that out. I think for the second portion of it, connectivity, I think is going to be a big deal. I think people are going to be primarily looking at what the trend line is, what is the retention of customers when it comes to Starlink, and what are the margins on that, and are they hitting the good economies of scale? And then I think maybe the most important thing is going to come down to XAI. And XAI is going to be all about CapEx spend and better clarity on what the actual model is and how much money they think they're going to put into it and how they plan on monetizing their AI engines. I think there'd be another little fourth thing on this, which is getting better clarity on the terafab.
What he said.
Yeah, wonderful. Thank you, Jonathan. I'm going to ask everybody the same question, but Jonathan and Ellie, what is the one thing, metric or communication you'd love to hear, you want to hear more about today? What's the top one?
Terafab, 100%. I think terafab is a thing that can meaningfully, if they achieve any portion of their terafab in a meaningful way, I think that it justifies enormous evaluations.
Okay, thank you. We got Aaron Burnett here. Aaron, you've got the best SpaceX financial modeling. You and Larry have been on the show several times. Have you updated it? Have you learned anything new in the last month since we've talked?
Yeah, we're always updating, fairly obsessive about the numbers. Having said that, there's a lot to come here, and I think we'll release our own version of an update in the next couple of weeks. My analysts are probably going to kill me by saying that publicly because that puts a deadline on them. Having said that, lots going on. I think one of the things we've really tried to dive into recently is really the AI compute side of that story. It is there's a lot going on. No one really knows what's going on with it. There's a lot of people trying to figure out where AI compute is going just writ large, whether you're a NeoCloud follower or something like that. And so we're really diving into that side of the story, trying to tie that into where orbital compute goes long term. Lots to do. I'm not sure how consequential the financials are going to be on this one. I think this earnings call, I think the real thing for me with this earnings call is trying to understand how they talk about things into the future. How do they talk about upcoming compute plays. How do they talk about Grok and Cursor, how that's going to be reported, just so that we can kind of all understand things moving forward. And then there's a lot more to dive into, I'm sure. I'm guessing there's at least 1 or 2 surprises up their sleeves, so we'll see.
Thanks, Aaron. Okay, Alexandra, they saw this one. This is the stock. What's going to happen to the SpaceX stock? It's so low right now. And apparently this shorts is incredible, 34% short interest as a percentage of float. Some people think, though, that this is mostly because of SpaceX employees doing a hedge because it was at high at one point. And then even Elon replied, I thought I had it here, but he replied saying, yeah, they never learn or something like that. What's your thinking, Alexandra?
Yeah, so let me quickly explain a little bit the different theories on who is short. There is a clear theory that the very early investors who can now sell, that's only 40% of the investors, and they can only sell 20%, so a maximum of 8% if everybody of them would sell everything they're allowed to sell, which obviously is not going to be the case, especially at these prices, but that they could have pre-run this by hedging. And then there's also a theory that they're actually not allowed to do so, because usually in lock-up agreements, they're not allowed to use hedging methods. But then there is private markets and also, and nobody really knows. I mean, it's just absolutely crazy how many theories are out there. So it could very well be that these were hedges when the stock was over 200. People thought, let's lock that in. And that would mean that in 2 days, when they can sell, there would also be a cancellation or a reverse hedging of what they have done. So it would actually be positive, at least neutral, and maybe even positive on the stock at that moment. There is a lot of speculation out there. What is clear is this is currently one of the most illiquid stock because it only had less than 5% IPO'd, and the ones that has the highest shorting among the mega caps with about 34%. It went already up today a bit. If it runs up, there seems to be a real technical limit for a lot of those options that are out there at 140. If it runs beyond 140, there seems to be the understanding among the option traders that that could really lead to a short squeeze. Now we're not there yet. I think we're not even at 120. I didn't check on my phone just before coming on. But if really there is a lot of good news, that is a scenario that could happen.
Mm-hmm. We'll ask you about the potential merger because if they'll even announce it or even talk about it at all. But before we go there, Joe Techmeyer, you prepared a few slides. Did you want to make comments first, or do you want to go through your slides as well?
Oh, just a couple of comments first. Thank you for having me on here. Like with Ellie had said, is we've gotten used to just covering SpaceX as far as the terms of the equipment, the launches, what are they doing for the development stage and everything. So it's kind of neat to be able to kind of think about it more as the business and where they're going to be going and kind of that guidance that they need to give us. So I'm really looking forward to hearing about that. Probably the biggest thing I'm really interested in, at least for this particular meeting, because it is the first one, is how does this go? What is the format? We're very familiar how Tesla financial results go, and sometimes people react positive or negative based on how the various representatives of the company talk about their vision. So this is a different dynamic, but it still has Elon. So I'm kind of curious to see how this is going to be presented and how they're going to kind of articulate their plans as we move to the future. The other thing, I mean, SpaceX it's kind of like sort of like Tesla, where it's a big group of a bunch of startups, and there's a lot of different moving pieces that are going on, and it's kind of hard to put them all together. And that's, you know, what this meeting is going to be about, is to see how does SpaceX put them together for that common vision. And then the last thing that comes to mind right now is that in a lot of ways, SpaceX is kind of at a crossroads where we have the Falcon 9 and the launch, which is allowing us to bring the Starlinks and get that system going, the mobile Starlink as well. And we're planning on how that's going to work along with the terrestrial AI data centers that they got through XAI. But this is also a transition to the next generation, and that's going to be moving to Starship and then bringing the V3 Starlinks, bringing in the StarMind, and trying to do everything orbital. And how SpaceX articulates how they're going to navigate from where we are now in the short term, relying on what is already there, to introducing the new term and bringing it into their service, and then keeping that as a consistent theme all the way through. So I think it will be really interesting to see how they put this together and how they kind of talk about that path.
Okay. Larry, you must be in just absolute joy. What's going on right now? This is your first earnings call. Tell us what you're thinking.
Yeah, it's been a long wait.
It's frozen.
There.
We can hear you. Just keep talking, but you're frozen.
Okay. Well, it's been a long wait. We've had to have a lot of patience as a private shareholder, a lot of patience for this moment. But look, this is a journey. We're at the beginning of the public journey. We've been in the private journey for a long time, and the journey continues. The journey hasn't changed in its direction and its focus, and that journey is really, the path ultimately to Mars. But interregnum is the moon, and the mini interregnum is establishment of this massive, Starlink world that they're developing in the sky, but also the data centers on Earth and the data centers in the sky. So, in classic Musk fashion, we're changing the world. In classic Musk fashion, we're not only changing the world, but we're changing the world, in multiple revolutions at the same time. So for us as investors, for me as an investor, for my group as an investor, this is so many shots on goal for such incredible goals that it is the natural go-to company together with Tesla, because Tesla it is kind of a mirror image of Tesla in a way. So at the conceptual level, it's one of these gigantic Musk ventures, and it fits like a glove with the Musk venture of Tesla. So it's a very exciting moment to be alive. I'm sorry that it's, this late in my life, but it's nonetheless very satisfying to be this late in my life. And also I want to say, I'm very humbled to be in such great company.
Thank you so much. Before we go to Jeff, I guess we should ask the question, is there anybody thinking anything that you might be surprised, that something that you think that we'll all be surprised about during the earnings call?
Well, I don't know if it's a surprise yet, but SpaceX just posted on X that they have an agreement with NVIDIA for their first AI or AI-1 Starmine satellite. So that's, they just pushed that out. So I was trying to start seeing a lot of this, I think, coming out from SpaceX as they try to articulate that vision into the future. And this also works a lot with the, I was recently over at their Bastrop site showing the factory that is starting to be built to build those actual satellites. So I think that's a pretty big announcement, and it also kind of gives us a direction of where SpaceX is trying to go.
So that would be NVIDIA chips prior to Terafab chips being available. Is that what that's for?
It's to
before the
design
AI5s?
AI-1 satellite compute payload. So
I just want to say that for those that haven't seen Joe's posting yet about what's going on, in these new factories, I mean, it is the most amazing sight in the world. You really got to get yourselves to Bastrop to see it. It's one of the great moments of U.S. industrial revolution, of this new U.S. industrial revolution.
Jeff, welcome. Anything that you might think that people might be surprised today?
Yeah, great to be with everyone. I think the big surprise, I don't know if it's a big surprise, but just this company is so many different things that move at different time horizons. I think the compute piece of it, actually, I always thought of this small company that SpaceX acquired right before it went public. but I actually think it could engulf a lot of the conversation in terms of what's going to move revenues over the next year rapidly. The space business is unmatched. It may be a decade ahead. You're measuring this in half and full decades in terms of its lead. What it does on these 90-day hamster wheel conference calls, it'll move at a different time horizon. And I think you are going to see more of these announcements. The StarMind announcement, everything's around compute, everything's around these partnerships, both terrestrial compute and then space-based compute. And then I would say watch what I think what's going to be important for the market is more of commitments and contracts being lined up, or real commitments and announcements from companies. I think it is important what the leadership team says, but I would also say that if you follow the Tesla earnings calls as well, and what's said is important, but also just following up with hardened, like we have these contracts, like what happened over the last couple of months with SpaceX and terrestrial compute, basically around $50 billion per gigawatt. And where is that going over the next year? And what is the target over the next 12 to 18 months? There's some lofty numbers that are out there. And no, we don't know of anybody that's actually put up more than a half a gigawatt of power in a year. I think there's only 2 or 3 operators that have actually been able to do that in one location. So they're an actually rare company when it comes to bringing up this compute. And I think the compute piece of it may swallow the broader story, at least on a quarterly basis for a certain time period, while the space business is kind of, I don't say floating, but it's there and it's a huge portion of the valuation. But in terms of these calls, I actually think the compute portion of it's going to dominate.
Floating like a starship in the Indian Ocean. Is that what you meant?
Maybe.
So Gwen Shotwell, Brett Johnson, what are you guys thinking? How's this going to fold out here? Gwen will take over.
Yeah, I think that I agree. I agree completely with that. I think that by and large, it's going to be about what is going on right now with the compute side of it. I think that's going to be the most important indication you have and what the market's going to be looking for. If we think about where we sit right now in the market, we are kind of, I think, in, let's say, the latter half of the earnings season. And so we saw what Amazon did. We saw what Google did. And essentially, if I were to summarize so far in the earnings season, what we've seen is a confirmation that this large amount of CapEx has been going into hyperscaling is essentially looking like it's probably going to pay off pretty good and have a good return on capital invested. When they originally IPO'd and we saw their S1, what we saw was that they were spending about 7 times more money on CapEx in their investment in AI than they were in their entire space division. So, when we think about it, it's not purely going to be a space company when you kind of think in terms of the 3 compartments of the company. And what we know is that when an IPO, they probably raise between 70 and 80 billion dollars. And so it's going to be, where are they deploying that capital? And if they are going to deploy most of it into the AI sector, how exactly are they going to try to monetize that? When you look at something like Amazon, it's very clear how they're trying to monetize it. When you look at something like Meta, it's very ambiguous how they're going to try to monetize that CapEx. And I think that's sort of where the market's going to be sitting right now when it comes to SpaceX, is exactly what is the profit pool and what is the model that they're going to use to monetize all of this CapEx spend.
Do you guys agree?
I do, largely. Yeah.
Yeah, that was very well said. I mean, the mix of monetization is quite important. Less important is the monetization or the revenue that they're going to earn from the space launch. But it has to be understood that ultimately the success or failure of this company is going to rest upon its space launch capability. Because no matter what the terrestrial capability of the company is, which is relatively short to medium term, the ultimate success of the company is going to lie in what it can achieve in space. And what it can achieve in space does not monetarily rest upon its launch capability, but it's absolutely going to depend strategically on its launch capability, because that's ultimately where the money's going to come from. we wouldn't set the kind of values that we internally set on the stock price of this company if they did not have this extraordinary launch capability. And it has to be said, it's extraordinary ability to build technology at the pace and at the quality that they do build.
Which is why we really need Starship to keep up, or have that monthly cadence that Gwen was talking about them wanting to hit, which Joe and I have been covering. We're hoping that we have another launch this month. Will they be able to pull it off? But they need to keep that frequency to fully develop Starship and see some of these milestones that we still haven't hit, such as the orbital reach that Joe and I are talking about.
Yeah. Well, I mean, Starship is definitely the center of gravity of everything that they have coming up into the future. Starlink is great. The V2 minis have been fine using the Falcon 9s, but once we get into Starship, being able to put the V3 Starlinks up, at least as the beginning, and as they start to augment and replace the older satellites in orbit, the margins that they can get, the costs per launch, the revenue that they have potential can be just it's almost hard to believe. For example, this goes back to that one slide that I had put together there, Herbert, is if you look at a single Falcon 9 launch with a V2 mini satellite, they're putting up about 2.5 terabits per second of capability, and it's costing them, or at least the revenue that they can get is about 36-ish or so $1 million. There you go. And it's recouped in about a year. If they can get to the mature Starship, they can put 60 of those new V3s, and it's 60 terabits. And it's about the equivalent of 20 to 23 individual Falcon 9 launches with the satellites for the V2
20
mini.
to 1.
Mm-hmm. Yeah, 20 to 23 to 1. It's almost unbelievable. So, yeah. And you can just look at how much revenue that they could be getting and the time for recouping that, or the payback. And the reason why I have two different columns is that right now we're kind of in the prototype stage where they're developing it still. But once we get to a little bit more mature and we start getting to the 50, 70, 80, more than those launches per year, the scale that they're going to be able to achieve compared to what they can do with the Falcon 9 right now is just unbelievable. And it's necessary because this is where we're going to see those star mines with the agreement with NVIDIA come in line. That's where we're going to see the Starlinks not only be able to add more of the internet around the world for a lot of different users, and that's growing constantly, but it'll also allow us to have that mobile capability where you can get basically coverage with your cell phone anywhere. There's also the Star Shield versions of those. And we haven't really talked a little bit about the government contracts that are also coming online into the future and what we're going to see. And of course, the Star Mind is another constellation. So all of that is going to be key for Starship. And that's why we're watching that so closely, and why it's such a dramatic step above what we're already seeing with the Falcon 9s. And, I've also kind of been thinking, as SpaceX goes for the next couple of years and they're bringing Starship online, as they try to prioritize which missions to do, because they have an agreement with Artemis to support the moon landings. They're going to need to use or have tanker variants of the ships. And each one, there's going to be about 10 to 15 tanker versions of the Starship per each mission that goes away from low Earth orbit. So when you're thinking about the revenue that you can get here with launching the V3 Starlinks and the return on the investment and the number of launches, if you could do 10 or 15 Starship launches with the V3 satellites versus 10 or 15 to refuel one mission to the moon, I think that they're going to prioritize to try to get that revenue so they can start making Starship revenue positive, or at least start, defraying a lot of the costs that they've been putting into that program. So as Ellie said, the launch cadence is going to be what's absolutely critical. They're going to need to get into many dozens, or maybe, 80, 90, and then more than that as soon as they possibly can to make this economics work out.
Well, and I know, Joe, that we were talking about in our last interview just what a big moat SpaceX still has with Starlink. You know, there is a competitor, which is Amazon, and Amazon Leo, which used to be Project Kuiper, but that's still not available to the consumer. And I started covering Starlink in the Better Than Nothing beta days in 2021, and I remember Amazon was also working on their own version of it, but it's still not available for you and I as it stands. So that's another huge benefit that they have right now.
It is, and they also have two different lines. Sorry.
No worries. But what do you two think about the heat shield discussion? How long it takes for reusability and all that. Is that a fake problem? Is that a real problem?
I think we're in an unknown right now as far as where it's going to end up in the development stage, but they've made considerable progress with it. And, right now Ship 40 is floating in the Indian Ocean. They're going to recover that. They're going to get a lot more data with the actual hardware to see where that's coming up. In addition to that, they've already got the next flight probably within the next few weeks of going. And if they do a ship catch, they're going to have yet another article, if it goes successfully, that they can study as well. As far as, is it a perfect heat shield? Not right now. Is that a bad thing? Not necessarily. And here's sort of the reason why. Is one of the advantages that SpaceX has over pretty much everybody else is that they have this gigantic factory and they're able to push out a lot of different ships in a pretty short period of time. And they're going to be leveraging that so that they can have many ships to choose from. So if it becomes a almost rapidly reusable or a fairly reusable, but with some maintenance or some having to remove some and put them on, they can leverage the fact that they'll have multiple different starships. And they've already proven with some pretty substantial tests going back to, I think it was Flight 11, where they essentially did, in the Air Force, we would have called it battle damage assessment, where they took a lot of the tiles off of it and they put it through probably the most strenuous test possible to see what would happen in the worst possible case. And it still was able to come through the atmosphere and land. And they were able also to determine which parts of the ship were the critical ones and which of them weren't. And so with the production capability that they have, with the knowledge and the data that they've already gotten, and the ability to have a launch rate with multiple different ships that you can move out and then do maintenance, I don't think it's as big of a deal right now, and it gives us more time to continue to iterate that heat shield. So I don't know. So that's my thoughts on that. Is there's some legitimate discussions, but it's not as dire as some people would make it seem.
But let me add to what Joe is saying from a financial point of view, from an economic point of view. If
can you just pause for a second? Sorry, Larry. I just want to, it's 1:00. Aren't we expecting the financial report to drop now? And then 30 minutes from now, that's when the actual earnings call will be live streamed. How do we get that financial report? If anybody gets it, please email it to me right away, because I don't think it's something you can download from the website.
You should have a link that actually provides it. I have that link.
That link is to the web stream, which I've got, the earnings web stream. I'm talking about the earnings financial deck.
No.
Does anybody know how we're going to get that?
Yeah, I think the financial deck is on the site. I thought I did. Anyway,
yeah, they'll post it, the results of the operational financial results of the second quarter after the market closes. That's now.
So you have to go on the ir.spacex.com, and then you have to go into the financials.
Yeah, I'm there, but you can only,
or in the investors.
You could, yep, and you can only sign up for it with your email address. It doesn't look like that they will post it on that page.
Well, I do believe they'll put it onto the investors page once it's
okay.
up.
I'm there. I'll keep researching.
There's a download link right now, and if you go to IR and you go to results, there's a download link. See what
Maybe it's under the current filings, the SEC filings.
No, that's June 26th.
Yeah, the last one I see is
Anyway,
June 26th. I'm signed up for it
But-
too, and I still don't have it yet.
bottom
As soon as you get it, let me know. Okay,
Okay.
sorry, Larry, continue.
SpaceX to post second quarter. SpaceX to. Yeah. Well, the point that I did want to make is that the financial analysis shows that even without reuse, there's a very significant opportunity. With
Stock is
partial
up
reuse, there's
127.
even more. Yeah, it's up. I've got it. Yeah. SpaceX, no, it's SpaceX to post. It's not the actual. On the same.
Is this
Yay!
it?
Yes,
That's the 8K. Is that it? The 8K?
it says August 4th, so it's got to be
Okay.
because that I think.
That's the 8K.
Oh, okay. I didn't see anything from August 4th on my end, so that's why I thought maybe it was it.
Yeah. It's so I don't know if that's the one we should be looking at, Alexandra.
Hurry up, SpaceX.
No,
Is this
I've
typical?
got SpaceX to post it.
Can you guys inform me? Is this typical that they would have like you sign up through your email and release it, or no?
No, go on the 8K, and then
yeah.
in the press
Yeah,
release
let's-
you have a link to a PDF.
Yeah, I got
You
the
see
8K. So why don't we just look at the 8K?
Yeah. It's
And then
it's got
click on that
earnings
link,
data.
and there you have that. And revenues of 7.8 billion, so that's $1 billion more than they expected. Net loss of 541, an improvement of the 467 of net loss. Adjusted EBITDA of 3.5 billion. Oh my gosh, so it's positive
Positive EBITDA.
from 1.2.
Yeah, that's what I.
Did you?
That's what I said. I said we get,
Here we are.
EBITDA
Yeah.
positive, but we won't get net profit positive. Yeah, it's exactly
Is this it, right? This is it. So here we go. Take a look at it.
what I believe.
Yeah. Where's the numbers? Okay, revenues. Is this it?
It's a good report. Yeah.
That looks.
EBITDA of 3.5.
Yeah.
Is that all? Hold on. Okay, here we
Yeah,
go.
there are 24 pages of it.
Any areas you guys want to look at?
Starting subscribers 12 million. So yeah, 12 million, 12 million subscribers. See the nameplate computer was 1.4 gigawatt. We expected 1.
Not a lot of no forward look, no outlook, no summaries, just the financials. That's it.
I think that'll come in the
100
form
billion
of
impact.
commentary.
I wonder where the difference went, because remember we're 87 or 86 and something of the IPO and 25 of that bond issuance. So I expected something around 110. So
Herbert, do you want me to start reading some of it while everyone kind
Yes.
of pours over
Go
it?
ahead,
So
please.
read you-
110 what?
I know some people are just listening, but you
Yeah.
know, SpaceX reports second quarter 2026 results. So they write, demonstrated the power of extreme vertical integration, delivering revenue growth of 92% year over year across space, connectivity, and AI. Completed 2 successful Starship V3 flight tests in the past 90 days, advancing towards full and rapid reusability, closed multiple industry-leading cloud services agreements, resulting in $14.1 billion of contracted sales, announced an agreement to acquire Cursor for $60 billion to accelerate the AI enterprise opportunity, released our most powerful AI model yet with Grok 4.5 in July, delivered 66% revenue and 79% income from operations growth year over year for the connectivity segment, driven by a doubling of Starlink subscribers and continued momentum in enterprise and government, and awarded over $6 billion in multi-year U.S. government contracts for Starshield. So, and then let me just read this part. SpaceX announced the following financial results for the quarter ended June 30th, 2026, as compared to the prior year quarter. Revenues of $7.8 billion, up 92% from $4.1 billion. Net loss of $541 million, an improvement of $467 million from a net loss of $1 billion. Adjusted EBITDA of $3.5 billion, up 191% from $1.2 billion. That's a lot of numbers all at once.
Ellie, you
Right,
can
but
still do it. You're doing this so well. So
Okay,
the
great.
10 billion I was missing, I found them. There are 9 billion in the capex for AI. But what is incredibly impressive is that they turned on the income. Well, not turned, but they reduced the losses for space. They improved the income on connectivity, and they halved the loss on AI. That is really impressive.
Well, let's read what the CFO had to say. 2026 has been a momentous year so far, and the second quarter demonstrated the true power of SpaceX. Revenue growth accelerated across all our business segments, and we delivered strong operating leverage with significant margin expansion led by our new AI compute agreements. Our unparalleled leadership in launch, Starlink subscriber growth, new enterprise, and government partnerships, and best-in-class AI infrastructure underscore our ability to drive meaningful scale and deliver attractive returns. As a newly public company, we are delighted to welcome our broad base of shareholders and bondholders. We ended the second quarter with $100 billion of cash equivalents, and marketable securities, and $47.5 billion in backlog. This financial strength gives us substantial capacity to invest in Starship, Starlink broadband, and mobile satellites, and our AI platform while maintaining a disciplined long-term capital allocation framework.
What is 47.5 billion in backlog? What is that backlog? Aaron, do you know? Would that be the leasing, data center leasing?
It's three things. It's the backlog in leasing. It's the Starlink backlog, but it's the launch and it's the launch backlog, particularly with government.
But Starlink and launch must be small, unless the $6 billion.
No, launch is gigantic. Launch is multiple billions. Launch is probably in the $4 to $6 billion range.
And then
aircraft. So airlines and other large corporate clients in Starlink is very large. So every aspect of their business is a very significant backlog, the biggest of which is the data centers.
47.5, that's a huge number. That's great.
Yeah.
I'd have to assume that, sorry, I'm like trying to read all the stuff and digest it all at the same time live here. I think it's going to have to be kind of on the compute side. I'm not sure that they could, I don't know how you would really track a backlog on the connectivity side in that way. It's a little bit more like you bring in new customers. A couple of things that stand out to me. The revenues a beat, I think, on all the consensus kind of estimates that are out there, and the revenue number. So in context of our modeling, like we're way conservative to all of the estimates. So this is not beyond us, it's beyond Wall Street estimates, which is already kind of on the bullish side of what we do. One thing I noticed in the CapEx seemed quite high. There's a big CapEx number on the AI CapEx line. I think that's to be expected. I just don't know that anyone really knew what was going on with that. Was anyone paying attention to the street's expectations of CapEx on the AI number?
And just in total, it's within like, it's very close to the expectations from the street. The 18 point, I think 5.8. It's within, but it's very close.
Yeah. Is it possible that a lot of that CapEx on AI has to do with the construction at Giga Texas with that Advanced Technology Center, which is already under construction, along with what they're doing out at Colossus with Mini Hard and fitting out that new data center as well?
Now, most of it is Bastrop because they don't have. I don't think they're on the hook for what's happening at Giga Texas. I think that's Tesla. But the capex is a pretty small proportion of the total assets, which is in the $63 billion range. So it's not as high as I kind of expected because Bastrop.
Yeah, I would assume it has to do with. There's a lot of things that they're investing in, but on the AI side, right? You've got several things, including Colossus and all this other stuff. There's that rumor around 4 gigs or whatever coming over the next year. There could be some investments there. I mean, it's all, you want to see that kind of spending over the course of June. I would assume that any kind of conversations they're having in the next 15 minutes or so, like that, they're talking about those kind of plans. Yeah, I don't view it as like, concerning by any means. It's just, those are the things that they're investing in. And I think the biggest investments have to be on the actual compute side of things.
Yeah, so if you back out their cash, which is almost 100, it's 93 billion. You back that out, they have $100 billion of total assets. So that 100 billion is a very significant number, and their capital commitment seems to be relatively light compared to that.
What do you guys think of the net loss? Is that going to be an issue for Wall Street?
No, it's much lower than Wall Street anticipated. Much lower. It's like half.
Yeah, I wasn't paying attention to what everyone expected a loss though. I was more focused on the revenues. And that is probably the bigger one. I don't know that they actually, I need to look a little bit deeper to see if they broke out the revenues by line and see where that landed. If I'm looking at this correctly, AI revenue might be a little bit higher than they had anticipated. Connectivity as well.
Herbert, do you want me to read some more of the highlights of all the businesses? And I wanted to shout out Hummer Geezer for the $50 super chat. Thank you for the super chat. He says, what a powerhouse of massive brain tissue. I agree with him. So let's read. SpaceX broke down the business highlights for all 3 of their sectors here. So space revenues grew 55% sequentially and 29% year over year to 960.
They're in the space. Okay, sorry.
Yeah.
Keep going. Go ahead.
Oh yeah, to $962 million, driven by a higher number of large customer launches and a favorable customer shift compared to the prior year. Total costs and expenses for the space segment were up $389 million year over year as we continued to accelerate R&D investments in our Starship program, which we believe will reduce the cost to orbit by 99% or more relative to the historical average and unlock significant revenue potential across business segments. That's really crazy, 99% or more. Leading launch provider for the world with 78 launches and 1,041 metric tons of mass to orbit deployed over the 6 months ended June 30th, 2026, primarily allocated to connectivity for the deployment of our Starlink constellation. Starship V3 development continued to advance toward full and rapid reusability. They completed Starship's V3's first suborbital mission in May, Flight 12, which achieved a successful liftoff from our new Starbase pad, a precision landing of Starship's upper stage, and deployment of modified V2 Starlink satellites. Subsequent to the second quarter, completed Starship Flight 13, which we just saw in July, which achieved all flight objectives, including deploying 20 production V3 satellites, demonstrating in-space relight of a Raptor engine, and executing the softest ever splashdown, which is why it's a boat right now, because it didn't blow up, providing critical views of an intact heat shield. So that is the space highlights. Do we want to get into connectivity business highlights?
Yes.
Just before we do, it's worth noting that the market is up about 10%, almost 10%. And that's because I think this is a significant beat on almost every parameter.
Actually, Ellie, let's go to AI business highlights before we do connectivity.
More, Larry. It's down now to 117.
Really?
So it's not up 10%?
It's down, and the after hours down 5. So it raised 10 today during the trading, and then after this hit, it went down 5. So the market, generally speaking, could be said to be somewhat disappointed by this earnings release. So we
Strange.
haven't gotten to the call yet.
Well, let's talk about the AI business highlights as requested. And as we've been mentioning, really is a lot of the business right now. AI revenues were up 213% sequentially and 247% year over year to $2.6 billion, primarily driven by an increase in AI solutions and infrastructure revenues from new cloud service agreements, as well as an increase in Grok and X subscription revenues. Total costs and expenses for the AI segment were up $1.6 billion year over year, driven by increased R&D investment, primarily due to higher infrastructure spend as we accelerated compute deployment. Cut operating loss by 49% compared to Q1 2026 to a loss of $1.3 billion and achieved positive AI adjusted EBITDA of $1.1 billion. Expanded compute capacity to 1.4 gigawatts, up from 1.0 gigawatts in Q1 of 2026 and 0.4 gigawatts in Q2 of this year, with the continued build out of Colossus 2 and with significant incremental capacity under construction. Entered into several cloud services agreements totaling $14.1 billion in contracted sales to provide customers with access to compute capacity, which resulted in $1.6 billion in incremental AI infrastructure revenues for the second quarter. Announced an agreement to acquire Cursor for $60 billion to accelerate our AI enterprise offerings with one of the most advanced AI coding tools available. We expect to close the deal in the third quarter of 2026. And finally, subsequent to the second quarter, released Grok 4.5 in July, our largest and smartest model yet, built to excel at coding, agentic tasks, and knowledge work. The model was trained alongside Cursor and incorporates our 1.5 trillion parameter V9 foundation model.
Thank you, Ellie. I'm gonna, in about 10 minutes, they're gonna start the actual live stream. So I'm gonna share this and let me know if you guys can actually hear it. Anything, yeah, so meanwhile, just anything there that you guys saw. So this is the actual, can you guys hear this?
Not yet.
No.
Okay.
And does your link not go to a thing that says joining? Because I'm stuck in a turquoise window saying joining. You know, the link we just received by email.
Might need to refresh the page. Sometimes.
No. No.
Okay.
Can you hear it?
I do not.
Oh, update. You will need to enable audio device in your browser in order to change your speaker device. This is a whole new system that they're using. Uh-oh. I have to figure this out, guys. Can you see if you can figure out?
Yeah.
Can somebody, Alexandra, can you see if you can try to?
And in the meantime, why don't I read the connectivity business highlights in case y'all want to know?
Okay, but I can't. I have to figure that out.
So you can work on that if you want, and I can just read it so that.
Do it. You got it.
Yeah. So connectivity revenues were up 32% sequentially and 66% year over year to $4.3 billion, driven by strong Starlink subscriber growth, with consumer revenues up 16% sequentially and 44% year over year, and an increase in enterprise and government revenues up 63% sequentially and 108% year over year. Total costs and expenses for the connectivity segment were up $970 million year over year, driven primarily by increased spend to support revenue growth, as well as higher R&D expenses.
Can anybody hear that?
Yes.
Yeah.
Music.
Oh, you can hear it?
Yes.
You can hear the music?
I can.
Yes, we can.
Okay, good. I'll turn it down now. Thank you. Keep going then. Sorry.
I still hear it. So total costs and expenses for the connectivity segment were up $970 million year over year, driven primarily by increased spend to support revenue growth, as well as higher R&D expenses for our next generation V3 satellites, which we expect to deliver meaningful increases in broadband capacity and data density. drove income operations for the connectivity segment up 79% year over year to $1.7 billion, and improved connectivity adjusted EBITDA by 64% year over year to $2.6 billion. And another milestone, they reached 12 million Starlink subscribers as of the end of Q2 2026, doubling year over year and up 1.7 million sequentially, while maintaining ARPU at $66 in line with Q1 of 2026. Wow. The demonstrated traction across our enterprise business, signed a major agreement with American Airlines, activated our service on a number of new airlines, including Southwest, Virgin Atlantic, Iberia, and Aer Lingus, and launched a new Starlink mobile partnership with international carriers, including SoftBank, NTT, Docomo, and Spark NZ. So now you know which airlines you should fly on. Awarded over $6 billion in multi-year U.S. government contracts for Starshield, our secure satellite network designed specifically for government customers and national security applications, primarily from two major Space Force contracts for LEO-based communications and sensing constellations. And finally, received FCC approval of the EchoStar license transfer for 65 megahertz of spectrum in the United States and certain global mobile satellite service spectrum licenses. A lot of words. 12 million Starlink customers, pretty incredible, and maintaining that ARPU at $60.
Yeah, I think that this is the, I see some comments saying we look sad. Hopefully I'm not the one that looks sad. I'm just like really fixated and focused, and I have no control over what my face looks like. One of those people. This is a big beat, right? Because you got 12 million on the Starlink side. So I'm going to hyper focus on Starlink for a second. 12 million subs, ARPU pretty flat from Q1. That's all points in the right direction. And it's a beat on Wall Street expectations across the board for, well, both connectivity and for the AI side. So you have beats on both of those. So effectively, to put it into context, the way we model, we're actually significantly lower than that because we kind of model a big conservatively today and then a big jump later from V3. That's kind of how we model. So I think this is headed in the right direction. One of the big questions that's been out there is, hey, if they're going to accelerate on the customer side for Starlink, the consumer side of the business, are you going to see a big pullback in ARPU because they kind of have to compete with really cheap offerings or what have you? So that's the direction here, is that it's actually been looking stronger than even I expected when you look at it from that perspective. Let someone else take the floor.
I was just going to say, I mean, this is obviously the first of the results that we've all seen as a public company. So I think everybody's just trying to digest what all this means. One of the things could be that what SpaceX is doing with the connectivity with Starlink and having the average revenue per user being maybe lower than what some people may have expected, is that they're using that first mover advantage and getting out there and getting all of the people to be part of that system, and then eventually that could come back up. I don't know if that's really the thinking or not, but it just seems to me like across the board everything is better than I was kind of expecting. CapEx for a lot of the AI stuff is pretty high, but it seems like they have a pretty good plan going to the future on that. As far as Starship and the development on that, it seems like even though it's still into prototype, that space overall is doing pretty well as far as the revenue and then the path forward. So I don't know. I think maybe it's just that everybody's trying to digest this for the first time and figure out how do you value a company that is so diverse in a lot of different areas like SpaceX. But I don't know. And I don't think we're sad. I think we're all just trying to digest this together.
Yeah, we're reading real time. I think the other thing, so just in terms of the market, I think the market's waiting for guidance and the call. I think that's the big thing that everyone's looking for from this. And the other thing is there's other companies reporting. AMD reported, looks like they're, slight beat, but the guidance is a little bit light. And a little bit heavier capex. So it's down 5%. It'll pull down the whole tech sector. So I just think in the case of SpaceX, the market's kind of waiting for the call, the guidance, and any other announcements. I think that's the key here. And then of course the other big thing is just these market mechanics that play out over the next 48 to 72 hours with this lockup. I think that's what's on everybody's mind after digesting what's really a strong quarterly report.
Herbert, I have a question mainly for Larry, but kind of for everyone if you guys want to answer. I interviewed Larry for the first time. I don't know how it took me so long to interview him. It was a great interview, but it was right ahead of the IPO about 2 months ago. And you shared a pretty bullish theory that, SpaceX was undervalued. And seeing these new numbers, do you still stand by that? And what is everyone's thoughts on the valuation?
Well, I think these are very good numbers. We who know SpaceX very well consider these good numbers. Actually, a little bit surprising, to be honest. So I was looking at the numbers before before the close of business, I guess, in error, and I thought it was up, but the market has marked it down. This is not unusual. We don't yet know. The market does not yet know how to value SpaceX, and Joe reflected that, and certainly Jeff reflected that. But this is not disappointing to me. These numbers are very good. They are very good. They're in line. They're beyond where I consider them to be. I think just as in Tesla, we have a public that is not really understanding this whole new industry that SpaceX is creating or has created, and how to value it. So I'm not disappointed. I'm pretty excited.
Okay, they're saying that
about
people
these
are talking on the call, but I'm playing this and this says it's live. I don't know. Some people said that they're
The live stream on X seems to be up because there are more than 10,000 people listening to it there. I just went there. It's at the same stage. No point changing. It's just the music everywhere.
okay. So it's just the music still there.
Everywhere, yes.
Okay.
Yeah,
It says it's
but
live,
It's
right?
still on X. I can tell you that.
Yeah, I think in the music it has people talking. It's just sort of part of the music.
That's what it was. Okay.
Yeah, bottom line,
Oh,
Elia, I'm not disappointed. I'm actually pretty excited.
okay.
And,
Here we go. No, maybe not.
Just a song change.
Yeah.
Just a
I
song
think
change.
the big thing right now everybody's expecting to see or interested to see is we're used to how Tesla's financial results go, and now we're going to see how SpaceX goes, and hopefully we get a clear vision of where they're going and the direction that they want to go, and hopefully that will be received well. That's pretty much what I'm looking for right now.
Has anyone been looking at the backlog statement there in the 10Q? You guys been reading that? That's interesting. I think it talks
Good
about.
afternoon, everyone. Thank you for joining us today for SpaceX's second quarter 2026 earnings conference call. I'm Andrea Williams, Head of Investor Relations. Joining me today are Elon, Gwen, and Brett, and we are speaking to you from our facility in Bastrop, Texas. Our second quarter financial results were announced just after 3 p.m. Central Time, and all relevant materials have been published to our investor relations website at ir.spacex.com. For this webcast, our prepared remarks will be followed by a question and answer session. We will take live Q&A from equity analysts and then move to questions directly from our investors that were polled on our dedicated earnings Q&A platform. Thank you to everyone who submitted your questions in advance. During this webcast, we will discuss our business outlook and make forward-looking statements. These statements are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC, including our final prospectus and today's published Form 10-Q. Additionally, during this call, we may discuss certain non-GAAP measures. In our press release and our filings with the SEC, you can find additional disclosures, including all reconciliations with comparable GAAP measures. For the second quarter of 2026, we announced the following financial results as compared to the prior year quarter. Revenues of $7.8 billion, up 92% from $4.1 billion. A quarterly net loss of $541 million, an improvement of $467 million, an adjusted EBITDA of $3.5 billion, up 191% from $1.2 billion. Now I will hand the call over to Elon for his opening remarks.
Thank you. So it's been another milestone year. Thank you. So it's been another milestone year for SpaceX so far. We're making great progress developing a fully and rapidly reusable, reliable rocket with Starship. We're connecting millions more people globally across 170 markets with fast, reliable Starlink internet. We're building AI compute capacity at scale faster than anyone else, we believe. And we're significantly improving our AI models, most notably with the release of Grok 4.5 last month. And now I'll dive into each of those topics separately. So with Starship, we completed 2 successful flights of Starship B3 in the past 90 days. Flight 13 demonstrated core capabilities necessary to achieve an orbital mission and return to Starbase for catch. And on Flight 14 will be our first flight to fly our version 3 Starlink satellites, our communication satellites, to operational orbit. We will try to actually catch the first and the second stage of Starlink V3 this year, and we could possibly catch the ship as soon as the next flight. It's difficult to actually explain to most people just the incredible significance of Starship. And I think perhaps describing it in terms of tonnage to orbit is a good way to appreciate the magnitude of the impact Starship will have on the future of civilization. So right now, we deliver, call it roughly 2,500 tons a year to orbit via Falcon. And this is a big number by normal standards. The rest of the world, I think, delivers around 300 tons. So we deliver 80 to 90% of total Earth mass to orbit per year with Falcon. Now with Starship, our aspirations, and I think we will achieve these aspirations, are to deliver well over 1 million tons to orbit per year, and probably ultimately 10 million tons per year. So this is not like if you had a chart where you plotted things, you would need a very, very big table to put the chart on to see to even see any of our competitors on that chart, and to make that. So our next biggest competitor was 1 pixel high on the bar chart. You would still need a very big bar chart to represent the SpaceX Starship vehicle. And it's worth noting that we actually encourage our competitors to copy us. We do nothing to slow them down. We actually launch competing satellite constellations at the fair prices, the same price we charge everyone. So we do encourage our competitors to copy us, but it's quite difficult to copy something like Starship. But we don't use patents as sort of a landmine exercise to stop people from copying us. We actively encourage it. So, anyways, but when you think about it on that, so we go from 2,500 tons a year to 1 million, potentially 10 million tons per year. It's really a ridiculously profound difference. But that is our plan, and I think we will achieve that plan. Regarding Starlink,
It's also worth just noting that the Starlink V3 satellite is about an order of magnitude more capable than the Starlink V2 satellite, which was already a very capable satellite. And we expect to launch about an order of magnitude more Starlink V3 satellites. So that would mean a roughly 2 order of magnitude increase in the delivered bandwidth. Even if our monetization per bit dropped by a factor of 10, that would still mean a 10x increase in the revenue of Starlink. So I think people are really underestimating Starlink here. So this is a big deal. It's kind of hard for people to wrap their minds around this, but like, it's not out of the question that at some point Starlink will deliver a majority of the world's internet, at least in countries where we're allowed to operate, which is the vast majority of countries. So this is important to bear in mind, and it's not in like the infinity future. It's less than 10 years. With the advent of AI and humanoid robotics and vehicle robotics and just a massive number of robots, the appetite for bandwidth will be much greater than it has been in the past. If you think of a human consuming perhaps or producing perhaps about a few hundred bits per second of output, and actually the average human is outputting less than 1 bit per second over the course of a day, which is 86,400 seconds. Now, computers, could easily do billions of bits per second continuously over a 24-hour period. So this is why I would expect the appetite for bandwidth to grow dramatically with the growth of AI and robotics. And really, I think Starlink is the only thing that can actually service that bandwidth. Regarding AI, we're making rapid progress on Grok, because Grok 4.5 was a huge improvement. And we have Grok 4.6 coming out probably next week. And then Grok 4.7 is about 3 or 4 weeks from today. And we expect the cadence of AI development to improve dramatically. And then with Grok 5, which should be out before the end of this year, we will be incorporating the entire corpus of SpaceX data, basically all the data that SpaceX has ever produced, which is a tremendous amount over the course of a quarter century, will be incorporated into Grok training. And we think this will make Grok by far the best engineer. So these are all like very, very big things. In addition, of course, we are providing compute to others, and we are building and deploying compute, I think faster, or our rate of growth certainly is faster than anyone else. And our efficiency of compute deployment, I think, is also the highest. So we expect to end this year with over 2 gigawatts of compute. And probably our cumulative compute online by the end of next year will be several times higher. So it may, let's say, be closer to 10 gigawatts of compute than 5 gigawatts of compute. That's a way to think about it. And going forward, we've decided to build exclusively on NVIDIA because we think the Vera Rubin architecture is the best architecture. We think it's the best AI computer, and we greatly value our close cooperation and partnership on many levels with NVIDIA. So we're exclusive to NVIDIA. And this new capacity coming online will obviously further benefit the development of Grok, as will our Cursor acquisition, which should close quite soon. I think we're through almost all of the regulatory hurdles. And then with respect to the Starmind AI satellite, which will be essentially an optimized Vera Rubin NVL72 computer. This is not some sort of far future distant thing. We expect to start launching these next year, and we think the design of the NVL72 VR computer is a much better design than is typical, than say having a standard rack style design. And so we expect to actually deploy this on the ground as well as in orbit, because we think it's going to be a radical simplification of the normal NVL72 rack. It will cost less, it'll be more effective. And so if we're going to put it in space, why not put it on the ground? So I think that's going to be pretty cool. In conclusion, the SpaceX team is solving some of the hardest engineering problems in the history of humanity. And I think the team is succeeding because I think we've got, in a lot of ways, the smartest, most dedicated team of humans that has ever existed. I'm incredibly proud to work with such a team, and I'd like to thank the team for their incredible hard work. And also thank you to investors who have supported us along the way.
Thanks, Elon. We had an exceptional second quarter, and today I'll focus on the operational and commercial highlights, as well as the initiatives we are prioritized going forward. Starting with our space business, we remain the leading launch provider globally, with 78 total launches and 1,041 tons of mass to orbit delivered in the first half of this year, primarily allocated to our own internal Starlink missions, but with great customer missions as well. While our launch capabilities are key to supporting our connectivity business, we continue to have a very robust commercial manifest and a very robust and growing U.S. government mission demand, which drives revenue for the segment. We're currently launching at our highest Falcon cadence and are on the precipice of operationalizing Starship. As Elon said, the first two flights of our V3 Starship vehicles put us in an excellent position to achieve our near-term goals of reaching orbit, catching and reusing the ships and boosters, and deploying our V3 Starlink broadband satellites. Speaking of which, Starlink had a standout quarter driven by continued growth across our consumer, enterprise, and government businesses. During the second quarter, we added net more than 1.7 million Starlink subscribers globally, consumer. This reflects our best quarter of new customers to date, an increase from the 1.4 million we added during the first quarter. We achieved this by holding ARPU, which is the average revenue per user, stable at $66 per month compared to the first quarter. We ended the second quarter with service availability in 167 markets and have continued to activate new markets since then, with some very exciting announcements coming soon, maybe even as early as today. As of June 30th, our constellation of operational Starlink, broadband, and mobile satellites in orbit grew to roughly 10,200, with our 9,600 broadband satellites delivering roughly 800 terabits per second of total downlink capacity. Following a successful speed run test of the V3 Starlink satellites on the most recent Starship launch, during which we connected every satellite through every laser link, we intend to deploy V3 satellites into the constellation for operational use on the upcoming Starship missions. The significant amount of capacity we're able to add to the Starlink constellation from the V3 satellites will enable us to continue providing even better service. I think it's pretty great already, but to do so while serving more and more customers over the world. In fact, in the years ahead, we expect Starlink will represent a significant portion of global internet traffic, which Elon also talked about. We also see significant growth opportunities for Starlink in enterprise and government, on the enterprise and government side of the business. We believe revenue from these markets have the potential to reach a scale at least comparable, but likely exceed our consumer business as we continue to gain share. In the second quarter, we signed a major agreement with American Airlines, as well as activated our service with new partners, including Southwest, Virgin Atlantic, Iberia, and Aer Lingus. We have become the provider of choice among major airlines with outstanding customer feedback, but still have significant room for growth. In fact, we heard from one of our airline customers, shockingly, customers are flying shorter hop flights instead of direct, so that they could ensure that they're on a Starlink activated flight. They'd never seen this in the business before. On the government side, we won more than $6 billion in U.S. contracts in Q2, supporting major Space Force programs that offer our nation mission-critical communications and sensing capabilities, and we see even more room for growth in this sector in this coming year. In Q2, we also launched the new Starlink mobile partnerships with international carriers, including SoftBank, NTT Docomo, and Spark New Zealand. Our near-term priority is launching mobile V2 satellites on Starship ahead of integrating the 65 megahertz of EchoStar spectrum later next year. This spectrum transfer was recently approved by the FCC and represents a foundational competitive advantage for Starlink Mobile. In AI, the industry is hurtling towards ever more compute demands. We're rapidly expanding our compute capacity to meet our own needs as Grok expands, as well as those for other leading companies such as Google and Anthropic. In terms of our own Grok models, the enterprise feedback on rollout of Grok 4.5 has been very positive so far. Token consumption tripled out of the gate after the July release, and we continue to see strong signals on usage and monetization for the model. We're looking forward to welcoming the Cursor team to SpaceX to integrate our engineering and begin to benefit from a combined sales capability. In review, our momentum as a business is extraordinary. Our engineering teams are scaling Starship and our next-gen satellites, while our sales teams expand Starlink, aviation, mobility, and global markets. At the same time, we're bringing on additional compute capacity and expanding and deepening our AI partnerships across a broader set of customers. And though I've been in this business for 24 years, I could not be more excited about the months ahead with all the exciting and amazing things going on. It really feels like we're just getting started all over again. Now I'll turn the call over to Brett.
Thank you, Gwen. We demonstrated strong results in Q2. Revenue growth accelerated across every segment. We narrowed our net losses by nearly half, and on a year-over-year basis, and we grew adjusted EBITDA meaningfully faster than revenue. Importantly, we significantly strengthened the balance sheet through our IPO and inaugural investment-grade bond offering. The combination of our global launch leadership, recurring Starlink revenue, and rapid growth in AI infrastructure continues to drive improved operating leverage. Now I'll walk through the financials for each segment. For the space segment, revenue grew 55% sequentially and 29% year over year to $962 million, driven by a higher number of larger customer launches and a favorable customer mix. Segment costs and expenses rose $389 million year over year, and we continued to accelerate R&D investments in our Starship program. Starship aims to quadruple payload capacity and reduce launch costs by 10 times compared to our Falcon 9 rocket, unlocking significant capabilities across all of our business segments. We continue to make progress building the infrastructure required to support thousands of Starship launches per year, including accelerating Raptor and launch vehicle production, the build-out of our gigabays, and making significant progress towards activating multiple launch pads at Starbase and in Cape Canaveral, at Pad 39A and Pad 37. Space adjusted EBITDA was a loss of $205 million for the quarter, primarily reflecting these higher R&D expenses. Moving to the connectivity segment, revenue was up in the connectivity segment was up to $4.3 billion, up 32% sequentially and 66% year over year. Growth was driven by record net additions of Starlink subscribers and a sharp increase in enterprise and government revenue. Starlink subscriber ARPU was $66, unchanged compared to Q1. As we continue our global expansion, we're taking a localized go-to-market approach that ensures our product and service offerings fit local needs. While our geographic expansion may drive down blended ARPU over time, we anticipate continued subscriber momentum to deliver strong revenue growth. Enterprise and government revenue grew 108% year over year and represents a durable source of revenue, contributing to strong segment margins overall. As Gwen mentioned, we see enormous opportunity for growth in this segment, as we remain, for example, less than 10% penetrated in one of the largest segments being aviation. Total costs and expenses for the connectivity segment increased $970 million, or approximately 58% year over year. The increase was driven by higher spend to support our revenue growth, including growth in our satellite constellation, increased R&D investment for our next-gen version 3 satellites, and incremental marketing spend. As Elon mentioned, our version 3 satellites are expected to deliver 10 times the amount of broadband capacity and data density from our current generations, which I think we believe are already pretty amazing, and which are essential to supporting continued subscriber growth and higher value service tiers. Income from operations from the connectivity segment increased 79% year over year to $1.7 billion, outpacing revenue growth and driving nearly 3 points of operating margin expansion. Connectivity segment adjusted EBITDA rose 64% year over year to $2.6 billion. AI segment revenue was $2.6 billion, up 213% sequentially and 247% year over year. The increase was driven primarily by new cloud services agreements, as well as growth in Grok and X subscription revenue. Advertising revenue grew 7% sequentially as we overhauled our advertising platform technology to enable AI functionality and enhance self-service for all customer types. In Q2, we entered into cloud services agreements providing access to compute capacity at our Colossus and Colossus 2 sites. The initial ramp from these agreements contributed $1.6 billion of incremental AI infrastructure revenue in the quarter. Total costs and expenses for the AI segment rose $1.6 billion year over year, reflecting increased R&D, primarily due to higher infrastructure spend as we accelerated compute deployment. We meaningfully narrowed our AI segment net operating loss to $1.3 billion and turned adjusted EBITDA positive for the segment in the second quarter at $1.1 billion. The incremental revenue from new hosting deals generated high incremental EBITDA margins as we monetized available compute capacity. We ended the second quarter with 1.4 gigawatts of nameplate compute, up from 1 gigawatt in Q1 and 400 megawatts a year earlier. We expect to end this year at over 2 gigawatts of compute capacity. Total company capital expenditures in the second quarter were approximately $18.4 billion, of which roughly $15.8 billion supported AI compute infrastructure. The remainder funded ongoing Starship and launch infrastructure, satellite production, and global ground station expansion. Additionally, we paid out $856 million during the quarter under our spectrum credit agreement related to our pending EchoStar transaction. Our capital allocation priorities remain clear and disciplined. We plan to continue to invest aggressively in the 3 areas we believe generate the highest long-term returns: Starship development and production scale, next-generation Starlink broadband and mobile constellations, and AI compute infrastructure. Across all 3 of these investments, we remain focused on capital efficiency, return on investment, and preservation of a strong investment-grade balance sheet. The second quarter was transformative from a capital markets perspective. We completed our initial public offering, raising approximately $85.7 billion in net proceeds, and followed that with a $25 billion inaugural investment-grade senior notes offering that was partially used to repay our $20 billion bridge loan. The senior notes were issued across 5 tranches with a weighted average interest rate of 5.855% and average maturity of 11.7 years. We ended the quarter with $100 billion of cash equivalents, and marketable securities, and $47.5 billion in backlog. Looking ahead, we continue to see robust demand in all three of our business segments, but in particular in our cloud services arrangements. We see increasingly favorable economics with each agreement we sign, and as Elon mentioned, we expect the supply-demand imbalance in the compute market to continue. The current economics have translated into a less than 1 year payback on our new capital deployments for compute. For example, in the first few weeks of the third quarter, we've already contracted an additional $6.7 billion of cloud services revenue over a 6-month period that begins ramping starting in October of this year. We believe this puts us on a trajectory, including contribution from Cursor, to reach $100 billion of ARR, or annualized revenue run rate, by the end of this year, based on our expected revenue in the month of December of this year. With that, I'll turn the call back to Andrea.
Thank you, Elon, Gwen, and Brett. This concludes our prepared remarks. For today's Q&A session, we will take our first questions from the equity analysts. Please press *1 to join the question queue, and also please limit yourself to one question. Operator, please proceed with the queue.
We will now begin the question and answer session. If you would like to ask a question, please press *1 to raise your hand. To withdraw your question, press *1 again. We ask that you pick up your handset when asking a question to allow for optimum sound quality. If you are muted locally, please remember to unmute your device. Please stand by while we compile the Q&A roster. Your first question comes from the line of Eric Sheridan with Goldman Sachs. Your line is open. Please go ahead.
Thanks so much for taking the question, and thanks for all the details in the prepared remarks. Maybe just one on the connectivity segment. Can you discuss the backlog of enterprise and government contracts in that segment of the business, and how we think about that backlog converting into revenue, and what that might mean for the pace and cadence of growth in the next couple of years? Thanks so much.
Yeah, we are quite bullish on our enterprise activities. I mentioned alone that we received from the government over $6 billion in contracts. Those are you can look at those as tranches and beginnings of additional capability that we will bring online. Some of which we will have to compete, but fundamentally we have the contracts in place to fulfill many phenomenologies, both the ones we've recently announced, as well as additional ones that we'll be working on going forward. Enterprise revenue is quite sticky. We have never lost an enterprise customer. They're quite happy with the Starlink capability that we have right now. Brett mentioned we are only 10% penetrated in the aviation industry, which definitely represents a lot of headroom for revenue going forward. Maritime, I think, is Starlink opens up the TAM dramatically. Starlink offers the capability that ships that don't really have much connectivity right now because they can't afford VSATs. We can basically outfit those ships with Starlink Maritime. So I'm quite bullish on enterprise, very bullish on government, and quite happy with the stickiness that we've seen in those markets.
Yeah, I'll just elaborate a little bit on that, which is that obviously in order to secure a large amount of enterprise revenue, you have to demonstrate and very high reliability, very high uptime. And in the early days, Starlink did not have high uptime. And there's a lot of enterprise customers, most enterprise customers, I'd say, that still have that maybe early Starlink experience where it was a little patchy. So we actually we're building up a large enterprise sales team just to go out there, meet with enterprise, basically corporate and government customers, show them the incredible uptime and low latency of the Starlink system today, so they realize that they can actually treat Starlink as a primary provider, not sort of as a backup provider. This requires just going out there, talking to people, educating them about the current state of the Starlink system and where it's going. And I would expect enterprise revenue to substantially exceed consumer revenue.
Next question, operator.
Your next question comes from the line of Adam Jonas with Morgan Stanley. Your line is open. Please go ahead.
Thanks. Elon, first one for you. Just confirming, you said you expect to be closer to 10 gigawatts of nameplate compute by end of 27, closer to 10 than 5. Do you have line of sight? How confident is your line of sight on permitting, chips, and turbines for that? And then I have a follow-up for Gwen. Thanks.
So we're actually aiming to far exceed that gigawatt number in terms of power online, power cooling, and electrical equipment. So our tentative target is to actually have 20 gigawatts at the power and cooling level online by the end of next year. Now, I don't think we're going to achieve 20 gigawatts, but we want to have a series of projects that cumulatively come to 20 gigawatts by the end of next year. Some of them won't pan out exactly on time, but I would expect that we still probably have at the power plant level something close to 15 gigawatts. So assuming that maybe a quarter of the projects take longer than expected. So our goal is to have far more power, cooling, and electrical equipment than we have GPUs. That's like the logical thing to do given the relative expense of GPUs versus balance of system. SpaceX as a company is incredibly good at hardware. In fact, I'd say probably outside of China, SpaceX and Tesla are the two best companies on Earth at hardware. Yeah, and I think perhaps even including China. So we're taking a small amount of the expertise that we use for rockets and satellites and applying that to scaling terrestrial data centers. And we're finding that even a small amount of what we've learned building rockets, which are incredibly difficult, applied to data centers yields tremendous benefits. So yeah, we expect to have far in excess of the power and cooling that's needed. And then our understanding with NVIDIA is that we will receive a very significant percentage of their GPUs next year.
Okay, thanks, Elon. Just Gwen, just a follow-up. You were recently asked what is one of the more underappreciated parts of the SpaceX investment story, and you said robotics. Can you elaborate on why you believe that? How do robots fit into the SpaceX TAM? Thanks, Gwen.
Let me try to put something together for you. I think what I might have said is underappreciating the amount of connectivity that we will need going forward. And I think robotics, especially robotics tied to AI, like for autos and humanoid robots, will dramatically increase the demand for connectivity. Dramatically. Elon talked about that in his remarks.
I mean, you can think about satellites as being robots. I mean, they're autonomous and they do not need servicing. So, and then, in the sort of what may seem the far future, but will come faster than you think, using robots on the moon to scale up manufacturing on the moon, which I know it sounds like super sci-fi right now, but it's going to happen, will enable us to build the mass accelerator on the moon. And if you have a mass accelerator on the moon and you have solar and radiator production on the moon, you can, I know this sounds totally nuts, but you can probably scale to 1,000 times the economy of Earth in terms of intelligence launched to space, but probably, maybe even 1,000,000 times. So, we are going to land a lot of tonnage on the moon. We're going to build the factories on the moon. The robots will be helpful with that. And then it's like, well, how much intelligence would you like as we, grow towards being a Kardashev 2 scale civilization?
Did that get that for you, Adam?
Your next question comes from the line of John Godden with Citigroup. Your line is open. Please go ahead.
Hey, thanks for taking my question. One of the hallmarks of SpaceX to date is how efficiently the organization has used capital so far in its journey. But it's also no secret that the capital needs are significant to support your vision from here. Obviously, the company's moving fast, so I was hoping you could talk a bit more about the CapEx outlook across the segments, touch upon any areas where buying versus building might accelerate growth. The mobile strategy obviously comes to mind there, and any related thoughts on capital needs for next steps in extreme vertical integration like Terafab, anything that's needed to support future growth. Thanks.
Yeah, no, I appreciate the question. I think we are very proud of how we have managed capital allocation over the years, for sure. I think we are continuing down that path, right? If you look at it, we have been very efficient to date, and I think we'll continue to be. If you look at the rest of this year, to answer specifically on CapEx, I think you should probably think that the next 2 quarters are very similar to the current quarter from a CapEx level perspective. But I do think, as you look at longer term, I think CapEx really, I think for our perspective, is all CapEx is not the same, right? What we're seeing right now is a situation where we're able to deploy, specifically on the AI compute side, we're able to deploy capital in such a way that we're getting less than a 1-year payback. It's almost like your capital is becoming almost an item that you would put otherwise in COGS because it's moving so quickly and as far as monetization and moving into revenue. That's different than, I would say, historically on the SpaceX level where, we're building assets that are going to benefit us from launch sites for the next couple of decades. And so we certainly manage for, optimizing ROI on our capital, all the time from that perspective.
Yeah, I'll add a little bit to that. As Brett mentioned, we are expecting to reach 100 billion plus ARR in December of this year. And it's probably also worth mentioning that our internal projections for reaching $1 trillion in revenue, not ARR, but revenue, have moved up from 2031 to 2030. So prior to the IPO, the financial projections we had were reaching $1 trillion in revenue in 2031. We now expect that to be in 2030. And there's a non-zero chance of that being in 2029.
Your next question comes from the line of Ronald Epstein with Bank of America. Your line is open. Please go ahead.
Yeah, hey, good evening, everybody. Could you walk through what you learned on Starship Launch 13? What was better than expected? What was worse? And then, how do we think about this in the journey to kind of rapid reusability, the heat shields, so on and so forth?
Sure. So actually Flight 13, I was a little worried about that Flight 13, because think of Apollo 13, like things went wrong on that flight, But this flight actually went incredibly well. The heat shield appears to be very robust. The ship is still floating in the ocean, and we expect to recover the ship and bring it back for analysis. So I'd say things look very good. And that's why we, assuming we receive regulatory approval to do so, we'll attempt to catch the ship with the tower on the next flight, which is tentatively scheduled for the end of this month. We expect the cadence of flights to be increasing rapidly, and probably a year from now, we will be doing at least 1 flight a day, possibly more.
Your next question comes from the line of Doug Anmuth with J.P. Morgan. Your line is open. Please go ahead.
Thanks so much for taking the questions. Elon, can you elaborate on the key unlocks from leveraging your rockets and satellite expertise just in accelerating the pace of compute build out? And then totally appreciate the $6.7 billion in incremental compute deals. Can you talk more about just how you expect the supply-demand environment to persist going forward, and whether you'll be able to keep this kind of premium pricing for these deals and sustainability. Thanks.
Sure. Well, as the saying goes, normally they would say like, this ain't rocket science. Well, actually, rocket science is literally our daily business. And rocket science is a idiomatic expression for extreme technological difficulty, and there's a reason for it. Because the thing, let me tell you what rockets desperately want to do every flight. They desperately want to blow themselves into tiny pieces. But then the engineering struggle is to convince the rocket not to blow itself into tiny pieces and actually deliver payload to orbit. But you'll note that some of our competitors do in fact blow their rockets up. This is not a reflection on their. This does not mean they're incapable. In fact, I think our competitors are very smart people. But despite being very smart, the rockets still blow up. So now, if you apply a small amount of the engineering skill that goes into making gigantic rockets reach orbit on a regular basis reliably to terrestrial data centers, this is like, frankly, the New York Yankees going in and playing a little league team, and it's kind of ridiculous, frankly. This is like the terrestrial data centers are a trivial problem compared to making gigantic reusable rockets, and which are launched frequently. And the Starlink satellites also are like alien level technology. There's still nothing that compares to our Starlink V2 satellites, and our V3 satellites are really more than an order of magnitude better than our V2 satellites. So you take a small percentage of that engineering applied to terrestrial data centers, and you get an amazing outcome. So that's what we're seeing. Yeah. Now, from a monetization standpoint, if you say like, what's my best guess for monetization per watt of, say, Rubens, my guess is would be somewhere between $30 and $50. This is just a guess. I'm just, take a guess as a guess. But what we're seeing with AI is that the intelligence per watt is increasing rapidly. So that means the usefulness per watt is increasing rapidly. And I think anyone who's a close follower of the AI arena, you start seeing smaller and smaller models do more and more amazing things. There's an argument that we may get to the point where even an H100 is able to deliver useful AI that's comparable to a human engineer. Based on current trends, I think that's not an impossible outcome. So then it's like, how useful would that be? I think the usefulness is going to be extremely high. I mean, if you think of like, where was AI 12 months ago? I mean, this is 12 months ago, would have been August last year. That would have been before the advent of Claude 4.5, which I think should be considered one of the milestones and a credit to Anthropic. I would say a shock to the system was how good Claude 4.5 was. And that was 10 months ago, basically. And if you say, well, what about an AI 2 years ago? I think, well, an AI 2 years ago feels like something that should be in a museum, okay? Where you're like, you're not going to believe this, but 2 years ago, this was AI. This relic. So I think, by the end of next year, it's not clear to me that there's anything that digital, at least, that AI won't be able to do, based on the current rate of improvement. Then look at the rate at which logic and memory is being produced. And one must always consider the limiting factor here. Limiting factor currently is memory. The memory output is increasing by around 20% per year. Now, normally that would be fantastically fast and amazing for any large mature industry. But ask yourself, is the demand increasing by 20% a year? No, the demand is increasing by 200% a year, maybe higher. So, so if you've got demand increasing much faster than supply, then economics 101 would suggest that the price increases. It does not decrease.
Your next question comes from the line of Edison Yu with Deutsche Bank. Your line is open. Please go ahead.
Hey, good evening. Thank you for taking our question. Wanted to come back on the comment about the 100 billion in ARR. Is there any way you can unpack that a little bit and perhaps kind of what it takes to get there? And then in relation to that, Elon, I know you mentioned you pulled the revenue target forward by a year. Can you maybe call out maybe a few things that gave you this extra confidence? Thank you.
Well, on the unpacking, I think that the key there is it's really growth in all three of the business segments. But the biggest piece is, and we already talked about, additional business we've already closed in the first couple of weeks of July on the AI cloud services side. But certainly, as you know, we've already announced some previous deals with Google and Anthropic that start to ramp either later this quarter or in October. And so there's a lot of momentum from that side of the business, as well as we're seeing strength in our own models and Cursor coming into the fold as well. So it's really all three segments that are driving that, but the cloud services piece being the largest contributor of that piece.
Yes, like to be clear, the 100 billion ARR in December is not a question mark. That's what we'd achieve if we basically did nothing. So, I think it may be higher than that. It probably will be higher than that. I think in terms of the relative percentage of breakdown of like what revenue generates what, I think the breakdown is probably similar to what we shared pre-IPO. It's just happening a year sooner. I will go back to what I said and what Gwen and Brett mentioned earlier, which is that we do expect a very rapid increase in revenue from Starlink communications from the V3 satellite. Because like I said, it's more than 10 times the capability of the V2 satellite, and we'll be launching 10 times as many. And we have the direct to cell constellation going up as well. So, sometimes people are looking at the sort of historical growth of Starlink based on V2, but we have a step change, a massive step change happening with the V3 satellite.
Your next question comes from the line of John Hodulik with UBS. Your line is open. Please go ahead.
Great. Thank you. Two things. First, Elon, just following up on that comment on Starlink Mobile. When do you expect to start launching the V2s? Can you talk about your appetite for additional spectrum after the EchoStar deal? And then just how big do you think that the opportunity is in mobile? And if you could compare that to the broadband business, that would be great. And then secondly, just a quick follow-up on the compute. Looks like you have a big ramp in compute coming in 2027. How should we think of that capacity being leased versus used for to train Grok? I guess in other words, how much of that has to be withheld to train Grok versus that can be leased out to third parties? Thanks.
I'll go ahead and take the Starlink Mobile questions, John. We're going to start flying the next generation Starlink Mobile satellite, which is confusing. It's actually the second version, as opposed to the V3, which is the broadband, next generation broadband satellite. We're going to start flying those next year. And just so you understand, currently the system that we're operating uses about 5 megahertz of bandwidth. And we operate that through local telco providers. we have 65 megahertz of bandwidth available to us through the EchoStar spectrum, which gives massive increase in capability. Another way to look at it is we were also probably 10x the number of satellites. So simplifying, you could look at the Starlink Mobile leveraging this, the next generation satellite and the EchoStar spectrum as being 100 times better, 10 times 10 better than what we've got right now. And it's a pretty decent service. You can do voice and video calls over Signal and WhatsApp. So we anticipate really strong uptake of that capability. As far as revenue, like I'm just going to take a very high level kind of top down. The big three in the United States, AT&T, Verizon, and T-Mo, roughly between them $600 billion a year. And I anticipate us to be able to acquire quite a few of their customers because I think our service will be better. We will eliminate dead zones, leveraging basically the satellites in orbit. It'll be better during any sort of natural disaster because surprisingly, even though space movies make space look super dangerous, is a pretty quiescent environment. So I'm quite excited about Starlink Mobile going forward. We will start to fly the satellites next year, and we will start providing service end of next year.
You're next.
I guess I should elaborate on. We obviously have like more than one question being asked here, but obviously if somebody's trying to create a financial model, some of these questions are you have to plug in some number here. So for Grok training, we do expect the percentage of compute that we use internally for Grok training to decrease over time and to have far more of the compute used for inference or for renting training and inference compute to others. So I would expect maybe 10% of our compute to be used for Grok training, something like that.
Your next question comes from the line of Katgun Marl with Evercore ISI. Your line is open. Please go ahead.
Good afternoon, and thanks for taking the question. I had a follow-up on Starlink Mobile and your ambitions in the U.S. market in particular. I think a lot of us are trying to better understand what a U.S. direct-to-consumer service could look like. To become a true fourth U.S. carrier would imply well over $100 billion of mobile capex over time, much of it auction spectrum and greenfield infrastructure. So how are you weighing that potential build plan against an MVNO or acquisition path? And what's your internal base case on how far you'll take this ambition? Or is this all a little bit too premature at this point? Thank you.
The spectrum that we purchased from EchoStar does have terrestrial components, so we definitely intend to build out the terrestrial component. So you will have not only the capacity from the satellites themselves, but you will have a build out of the terrestrial, basically the hardware and systems necessary to make a true mobile service exactly what you want it to be. I'm not going to talk about the capex for that. It's a little, well, I don't want to say it's immature. I'm just going to say I'm not going to talk about the capex for that right now. But let's talk a little. Let me give a little hint, and that is, you could put a base station, a cellular base station, on basically the gear that holds a Starlink broadband dish. So you can have kind of these little femtocells around the country, and you deploy that as you need it. You don't have to necessarily spend, 10 or many billions of dollars in low band spectrum all upfront before you deploy your system. So that's why I don't want to talk about the capex for building out the terrestrial, because we have a lot of really kind of great and new ideas for how we're going to do that, and I think it will be quite capex efficient.
Yeah, that point is probably worth just a few more words, which is that because this is quite an important point. Instead of having to deploy these very expensive and difficult to locate large cellular base stations, we feel reasonably confident that we can deploy a large number of sort of small stations, essentially. They're really just Starlink dishes that also provide connectivity in the mobile spectrum bands, and have them be all over the place. And the Starlink antennas are located on the roofs of houses and businesses. So they're, that they've got a sort of a clear view to, for providing connectivity directly to cell phones on the ground. And in fact, providing connectivity that is, we think, probably better and higher bandwidth than what is currently available from cellular providers. This is an important point.
Thank you. With the remaining time, we would like to cover some of the questions from individual shareholders. I will read them aloud. We got a lot of questions on the progress for Starship Human Landing System. Can we provide any updates?
For Starship, well, obviously we need to make Starship super reliable for satellites before we put any people on board. But we are expecting to have a very high launch rate and thus achieve a level of safety needed for humans very quickly, probably by the end of next year.
As far as the milestones go, propellant transfer in orbit is critical to our both our internal SpaceX as well as our HLS ambitions. Artemis 3 mission is next year. That's where we will dock with the Orion spacecraft. We will follow that up with a direct to lunar cargo mission, uncrewed. And then we want to put boots on the ground, boots on the moon in 2028.
For the Cursor acquisition, there were several questions asking about the combined product roadmap for the companies once it closes.
I think we'll leave that to, we'll probably make some announcement or discussion of that outside of the earnings call. But we don't want to jump the gun on regulators for the closing the acquisition. So we're trying to get the acquisition closed as quickly as possible. I think we're pretty close to that, but we have to be wary of sort of jumping the gun on regulatory closures.
Next question from the individual shareholders. Once you start launching broadband V3 satellites, how quickly will they translate into improved Starlink service?
Well, so we'd need some critical mass of V3 satellites, probably at least on the order of about 1,000. But probably that's, I mean, approximately second quarter next year would be, I think, where we'd get to that point.
And our last question, is the heat shield the hardest remaining problem for Starship?
Look, I don't want to jinx it or anything, but I think I'd consider the heat shield problem solved at this point. Now we want to take a close look at the ship that is currently floating in the ocean, but all indications from data and our visual inspection suggest that that we have solved the heat shield problem, which is arguably the single biggest problem. That doesn't mean we won't make improvements to the heat shield. Of course, we'll continue to make improvements to the heat shield, but I would say that we do not see any technical obstacles at this point to achieving full and rapid reusability.
Thank you. This concludes today's call. You can reach us at ir.spacex.com, and we will see you next quarter. Cheers.
This concludes today's call. Thank you for attending. You may now disconnect.
Wow.
Wow. That was a really good call. Hey, guys. I mean, amazing. Professional. Everybody was well spoken. They knew what they were talking about. The top things I jotted down were the lines about the 100 billion of ARR, annualized revenue run rate by the end of this year. Elon thinks that, like, we already got that. It's just, it could actually be more. And then him said later that they expect 10% of that compute to be used for Grok training. So there could be a lot of leasing still ready to go. Aaron, you followed this so closely with all your calculations. What has changed?
This is such a cool call to be a part of, or just to listen in on. I don't know how you guys feel about Tesla and all that stuff, but it's just like so much information. It's like I've been waiting. I don't know. I think we've all been waiting for this. Whoever's been following SpaceX closely, really cool to see. 10% training is a very big deal. I think we estimated quite a bit more when we were doing our AI compute. So it's actually, I think we said like roughly half for internal, half for external. That is, substantially different to use 90% that you can use for other things. Now it doesn't. Now you said 10% for training. That's significant because that is not for internal inference. So you could still have inference being used, that's better. You're getting more money for every token that goes through a system than for than when you're going and selling that externally. You're only getting like a certain percentage, and in theory, I think ARC has estimated it's like 2x. Don't quote me on that number, but it's a lot more when you are selling your own inference versus renting it. So that's a big deal. There's a lot of other things. I need to let other people talk so don't monopolize.
Okay. Who wants to talk?
Let's hang on to that number for a bit, because I think the estimates from the compute contracts from a couple months ago were basically $50 billion for a gigawatt hour of compute. And that number isn't declining. It's actually growing when you look at GPU spot pricing, rentals. And we have to see, if anything's revealed in some of these new contracts, but there are expectations that could be upwards of $70 next year. So, I mean, if you start discounting some of this stuff and saying, okay, Elon says 5 and 10, closer to 10, again, and this has to be up and running and available to be leased out. These numbers start becoming insane if you just start multiplying what a gigawatt hour of compute can sell for and what they're going to use internally versus externally.
Well, didn't somebody estimate 4 gigawatts is $100 billion of revenue?
Yeah, that was Gavin.
That's on the real low side. That's
it is.
I mean,
that's on the low side, Jeff.
Yeah.
It's $50 billion right now.
Yeah.
For
and
50 per one. Yeah.
Exactly. Yes. And to get back to Aaron, I mean, we are used to Tesla calls, and Tesla calls are a little bit more chaotic. So the good relaxing thing for us is how structured this was, how prepared they were, how far everybody knew they wanted to push it without going too far. And I just want to remind all our Tesla friends, Tesla makes about 100 billion per year. So if we have two companies that are 100 billion per year, and this is a higher margin business, and this has currently 100 billion in cash available compared to 40 billion on Tesla. I don't think many of the worries that people have out there are founded anymore after you've listened closely to this.
All right, I guess I'll go. One thing I found interesting is that they did this at Bastrop, and considering all of the infrastructure, everything that is being built there and what that means for the future, I don't know if it's just because it was close to Giga Texas or not, or if they decided to do that for a message, but I think that gives us an idea of just how important Bastrop is to the future, and we're thinking about everything that is being built there. I look at Starship, so that's the first thing I'll look at. A couple of big news things that came out of this. One, I think that they feel like they're well on their way in the development of Starship, which is outstanding. And the data that they're getting and they got out of Flight 13, with the idea that 14 is going to be not only orbital and putting V3 satellites for the very first time into operational status and beginning that process of bringing those satellites up, but we hear that there's going to be a catch. So that's a confirmation, at least from what I heard. And they also want to get the booster and ship both caught by the end of the year, which is big. But the bigger news is the scale that they're talking about, I think, is just we've never seen anything like this before in the history of space. They want to have a launch a day next year, which means 365 launches, give or take, for next year. And they also mentioned by the end of next year, certifying it for humans, which is amazing. And that kind of goes pretty consistent with what Elon has been saying in the past, that it would take hundreds of flights in the Starship to be able to be confident enough. And they're planning on doing that in a year, which is incredible. And of course, continuing to build out to meet the Artemis program with not only doing the Artemis 3 Orion rendezvous, but looking at landing and then doing a lot more onto the moon as well. Just the sheer quantity that they are committing to is, I don't know, it's unprecedented, and it's just very impressive to me. Couple other things, they talked about having more power and more cooling capability that they need, or at least they're planning for it for the data centers that they're going to be building. Infrastructure around the country right now is, when it comes to AI data centers, is being driven by power, cooling, and also public perception on that. And if they think that they're going to be able to get that in place, that puts them way ahead of a lot of their other competitors, which I think is really important to think about. The last thing, just top of my head, there's just so much to go over, is their agreement with NVIDIA is quite interesting, because not only is it signaling that they're going to be using those chips for their terrestrial AI data centers, but they said that they're going to use them for the orbiting ones, at least initially. What that means is that they're not waiting for Terafab. They're not even waiting for the AI satellite production facility to be finished at Bastrop. They're going to use their existing ones now, start building them using those chips and getting those put into orbit very quickly. So typical, like you see with Tesla, typical with Elon's company, is they are moving all speed forward on this, and they're not waiting for all of the pieces to come into place.
I just wanted to add that, we saw an article last week from Ars Technica kind of talking about what a big problem the heat shield still is. And Elon basically refuted that, saying, I don't want to jinx it, but I consider the heat shield not a problem or that it's a problem solved at this point. I would say that we do not see any technical obstacles to achieving that full and rapid reusability, which is, really great to hear. And I wanted Joe maybe to chime in and remind people that they're going to be retiring Falcon 9. I mean, so much hinges of their future and of our future hinges on Starship really working and, and doing the ship catch and doing the orbital refilling and meeting all of these milestones, that it's not just we hope they can pull it off. It's critical for all of the other ambitions they have. So Falcon 9 is not, it's the reliable workhorse of the industry right now, but they're going to be retiring that fairly soon.
Yeah, I was going to say, on your point on heat shield, is kind of what we were talking about before the meeting. My feeling and what I've been seeing is that they have a pretty good handle on that with what they were getting with that, like I called it, battle damage assessment, the experiments that they've done all the way through, what they've seen over the last several flights, and the fact that they're going to have a production capacity to be able to have multiple ships. So even if there are small issues, they'll be able to deal with that without really affecting their cadence. And your point on Falcon 9 is very valid. For those that don't really cover SpaceX all that much, there's a lot of things that are in place now showing that they've already begun that transition. For example, out at 39A, the launch tower that was used for Falcon 9s has been pretty much converted only to Falcon Heavies, and they're not flying Falcon 9s out of that. They've also retired, essentially repurposed one of the drone chips to be used as transports for the Starship. And all of the infrastructure that they're building out at Kennedy Space Center, both on Slick 37 with 2 new towers, 39A with 1 tower, probably another one, and what we see at Starbase. Also, what we're seeing probably at Vandenberg as they're reevaluating what they're going to do with construction to probably transition to Starship. And then we're hearing that down at Louisiana, there may be a purchase for more. They are leaning quite heavily, including Star Factory, the Gigabays. They're already doing that transition. They're envisioning that day where Starship is going to take the bulk of the work. And all of the infrastructure, the CapEx, everything that they're doing points to that. And we've heard not only in our pre-conversation, but what Elon said, and it kind of reiterates the order of magnitude step change that Starship is going to be bringing when we're thinking about everything from connectivity, the amount of terabits that they're going to be able to put up, the amount of service that they're going to be able to add, having mobile Starlink, bringing in StarMind, everything hinges on what's happening with Starship. And this transition from Falcon 9 is definitely underway. One other thing I just remembered about it is that the first thing that Elon started with was Starship. It wasn't AI data centers, it wasn't satellites, it wasn't Starlink, it was Starship. So I think that reiterates one more time that is the center of gravity of everything. And the fact that they're pretty bullish, especially with the heat shield and what they're seeing with reusability, is huge for SpaceX moving forward.
Actually, it was called BFR for Big Effin' Rocket, but yes, Starship.
So Larry and Alexandra, how come no mention of SpaceX acquiring Tesla?
Well, we're at a
not the right time.
No, this is
Did
not
you
the
have
right
an earnings call? You have
place or
analysts.
time.
They should ask the question just like they did in Tesla's earnings call.
No, this is and SpaceX would push back and simply not respond.
Yeah,
we're at a magic moment. We're at a magic moment. This is the same moment we were at in 2017 with Model 3 production. We're at a magic moment. The industry is not ready for this moment. This moment is a transitional moment between where we were and where we're going in the future. Everything that they're doing right now points to this transition from what was in the past to what is coming in the future. And as was the case in 2017, the industry, the financial analysts do not see this transition and the importance of this transition. But we're in this transition. Everything Joe said, everything that Ellie said, everything that Aaron has analyzed and shown us the way is in the process of happening. And the industry, the analysts, and the public do not see it. So it's a magic moment. It's a moment that only happens once a decade. We're in that
once in a civilization. I mean, they basically said this.
Yeah.
They said that all of internet's going to be through us. Pretty well all mobile eventually. Maybe all of intelligence will be through us. I mean, it's like
all of data, all of intellectual processing, all of the computer mind will happen in space by definition, and we will see that happen within the next 5 years. Of that, I'm convinced. So, and Alexandra will see that we managed through this process.
I do see
Right,
that.
Alex?
I still think we have a news very soon, but let's wait for it.
Yep.
Just a comment kind of on the tenor of I didn't call. It was 100% positive, kind of reaching for the stars, no pun intended. Really not tremendous amount of risks were outlined, certainly not by Elon. This comment about getting to $1 trillion revenue run rate before the IPO, I thought it was 2031. Now they're saying it's 2030, non-zero chance of 2029. I mean, these are significant statements. And then they went all the way, they went through the entire gamut from this year, like 100 billion ARRs already in the bag without doing anything per Elon. And then next year talking about the amount of compute that they're targeting to bring up, and a small percentage of that being for their own use, the rest of that getting a very rapid rate of return. And if people are asking like, well, what's happening in these short-term movements? After hours, things are kind of weird. But that inextricable link of we're going to spend a lot, like we spent the entire call talking about all these projects. We're going to spend a tremendous amount of money. We spent 0.37 billion in the first half. on CapEx, and people are just looking at the cash, they're looking at the CapEx, and just connecting the two and saying, we're going to have a very, very short rate of return, and that rate of very small window to get that ROI, and that window is actually going to decrease. And looking at some of the charts that Joe shared by program, they have a baseline for rate of return, and that it's actually decreasing. So I just think the simple message of we're in control here. We have our supply partners. We know how much we're buying. We know what we need to buy. We've got capacity locked up. And if something happens, then they can change. They can course correct. But it's almost like they're kind of projecting like we have buyers for all of this, and that's why why else would you be building that much compute so rapidly?
Less than 1 year rate of return, Aaron, you're going to have to change your charts significantly. No matter how much money they put in, they are the fastest to build the data centers, but they're probably the fastest to get the rate of return back. And so why wouldn't you then just double next year, triple next year, just build as much as you can?
Yeah, I'm like monitoring the situation over here, and like in my internal
situational awareness.
My internal thing, it chat's going off, and it's just like one after another where we're way too conservative. One of the things being conservative that we pointed to before was ramp up for StarMind is definitely one of these things. I think it's notable that they committed effectively to NVIDIA. I think that's a big deal. I don't think Elon takes these sort of things lightly. He's a fairly big kind of loyalty guy from what I see from the outside. And him committing to that is a big deal. You could say that's good for NVIDIA or bad, whatever. I don't care. It's just a big deal at that point, because it also shows that StarMind's a lot closer to being a reality in orbit. They're going to do it on the ground too, but it's a lot closer to being reality than I think. If they're committing to NVIDIA GPUs and they're trying to use that as maybe a tool to grab a larger percentage of Rubens, and they're very serious about this. So that's one thing. Another thing that's coming up is the ARPU kind of stabilizing. It's like we're too conservative. I think our numbers showed, our forecasted numbers we had showed a very dramatic, a substantial drop over time on that. Elon said something that was kind of interesting to me. He thought enterprise would be bigger than consumer. I don't know anyone that has like a big number for total Starlink. I don't think has that baked in. That's like off the top of my head, and I know we don't have enterprise being a much bigger thing. So I think he's giving us some indication there. GPU hours being, I think you guys, some people tuned out when he was talking about GPU hours being kind of a stabilized thing. That's actually very important. It's all about the demand side of GPUs, AI compute and stuff. People can't wrap their head around like exponentially increasing demand. And so him kind of articulating that and talking through how you could see this only going one direction, I think is very important. That's all the AI compute business. It's like the AI bubble questions that keep coming up with people. Is there enough demand? Yada, yada, yada. And then, probably a few other things as well that I forgot. Getting breathless over here. Maybe someone can take over.
Well, one thing I would just remind people is that space can be difficult. So do I really think they're going to get 360 launches next year? No, I don't. I think it's going to be somewhat less than that. But keep in mind that for every launch of a Starship with 60 V3 satellites, that's the equivalent of about 20 to 23 Falcon 9s. So even if they do just, 20 or 30 launches, they're exceeding the entire capacity that was put into orbit last year by a record-breaking Falcon 9 launch of 165. So he was talking about order of magnitude. This is like each time a Starship goes up, we're seeing 23 Falcon 9s going up.
Yeah, put that into context, what Joe's saying. Basically, if they get one Starship a month, they've put more than the entire constellation bandwidth today. Right, so you can, in theory, double. One a month, you get under that cadence, you are now on pace to double your bandwidth. 2 a month, so on and so forth. It grows really big. And this is what Elon was saying, hey, you're looking at a 100x increase in bandwidth. Even if we had to drop, he was being, I think, hyperbolic. Even if we had to drop prices 10x, meaning their average ARPU is now $6 instead of $66 per month. That'd be a crazy low drop, right? That won't happen. But even if we had to do that, they would still 10x their revenue. I think that's
what he said.
important
Yeah.
for people.
If it falls by 10%, doesn't matter. We're going to be 10 times anyways, because it's going to be 100 times growth.
You know, the other thing that you said on that call, and if you have a manufacturing background or not, it was screaming to me that the fact that this Starmine satellite, this first one, is going to be installed in the terrestrial data centers. Number one, what they'll do is until space is ready, they'll be building and installing these and then debugging them, servicing them. What fails, what breaks, and you can walk into it and fix it. And you can actually make that system more robust on Earth. And then at some point, that ratio, if they build 100 of these things, instead of it being 100 going to Earth, all of a sudden it'll be 5 of them going to space, and then 10 of them. All of a sudden that will flip. And by the time it flips, it will be a
robust,
totally robust and debugged. And I think some people have asked a question about that, like, how do you fix something in space and what happens? Well, they basically answered it without actually directly telling you. And from a commonality perspective, from a NVIDIA perspective, from like, what am I ordering? What am I telling my suppliers to build? Making those two the same, outside of, you have to add the solar and the radiator piece of it, making those two the same core gives you that flexibility, and you're not gonna have any supply chain or inventory issues, which would really gum up the system. So that was a huge de-risking event without them actually announcing it as such.
Does anybody want to talk about one of the other things that they brought up? It's hard to wrap your head around, but this distributed cellular service that may be put into place because of mobile Starlink, maybe using existing uses or we've heard in Tesla possibly putting stuff like this on superchargers. I mean, this could just completely, shake up the entire cellular service if this is successful.
Well, we just don't know the products that will emerge, because emerging products are the best products. Firstly, I disagree with you, Joe, in terms of the potential for next year, in terms of the number of launches and number of satellites. I think that it's going. Reuse is a very valuable asset in terms of cost, but actually, if you do the cost calculation, and I believe that the reality is that even if we don't get a very high level of reuse, the cost comes down very significantly using the launch capabilities that we've now developed, just without reuse of Starship, and maybe just the reuse booster. The value is very high. So what the products are that we can develop off that, I don't think we're going to explore fully. So I think that just as we faced at Tesla, the actual revenue and margins and profit that we're going to earn in the near future is going to stun everybody.
One more comment on NVIDIA. I've always thought this was the plan. I think when they did the design review of the first rollout, I think that he'd said that we're starting with NVIDIA. He may have posted about it too. So because there's no way Terafab is years away from being ready. So I think what they announced today, though, is just more of like solidifying and then saying we're going to be exclusive with NVIDIA. NVIDIA is up after hours on it, and AMD reported. So there's other things going on, but they're down for that reason, maybe some others. But that's always been the plan. I think there's going to be prototypes of this thing here very soon, and I think they're moving very quickly. They're not waiting for Terafab to put a data center in space.
Yeah.
Did you hear him say that he's getting all of NVIDIA's GPUs next year, or are they going to NVIDIA giving them all that they need?
High percentage.
He's not going to. Yeah, that is not for him to speak about because he doesn't know. He's not inside of NVIDIA doing allocating. But the way that everything is shaking out, and given his consumption rate, given what he actually lights, how quickly he lights it up, he's going to get whatever is available and he asked for within a reasonable manner. He's going to be on the allocation list. They have an allocation list inside of NVIDIA of like, who are the best customers, who takes our product every time when we ask it, who never sends it back, who never has delays, who never has all these kind of, and then they want to keep putting product into them because they'll just keep reordering. He's at the top of the list. And if you send in GPUs to Elon, it's going for SpaceX AI. It could be going for Tesla. It's got multiple homes, and it looks like he wants to be the king of compute next year. So he is number one on their list. There's no doubt in my mind.
Well, part of what I was getting to there is that he's basically cornering the market on compute. And if people want to use it to be able to make their models work, they're going to have to go to pretty much one place.
One thing that I think that it's worth diving in, just like one more scratch below the surface, is Gwen's articulation of which someone mentioned, I forget who mentioned it, but articulation of the Starlink mobile terrestrial use of the spectrum. This is something that Larry's heard me pound the drum on for a while, which is this concept of kind of like an outside-in strategy for Starlink mobile. From a physics perspective, there's some limitations when you're coming from space, yada, yada, yada. This is their first time articulating, building out these, you mentioned, kind of a femtocell, low cost, low CapEx investment in ways to tackle kind of the dense urban canyon. This is the telco experts' singular thing that they've ever said is like, oh, they can't be a real, they're always going to be a little satellite broadband player because of this. And this was always one of the core things. And so I think that's a big articulation for them. Someone mentioned, I think Sawyer Merritt was, I don't know who said it. I'm trying to remember all the things I'm seeing. There's something like 600 billion coming from the revenues for just the big three in the US, T-Mobile, all those guys. Yeah, Gwen mentioned that. Okay, so the thought process there is, okay, well, that's just one country, right? Like every country has some of these top players. So they can start to do this in different areas as well. And so that's where them as a global kind of provider and being able to take a decent share of wallet as a mobile provider is very important. And then you add in the intelligence on top of this. That's where it gets really, like, this is where it gets really interesting. And what Larry's, I think, alluding to when he's saying, what's the new growth markets? What are the new things that happen when connectivity is by default intelligent? And then you have kind of the intelligence connection network. This is an important piece of what's happening. So yeah, it's exciting.
Jonathan, what's your reaction?
I think everything was generally in line with kind of what I was expecting for the most part. I think the kind of NVIDIA exclusivity is fairly interesting. I think particularly the fact just that he sounds very confident that they can get the NVIDIA GPUs, which is, I think that it's a lot of relationship building there. A lot of companies want these, and but they think it's an interesting choice, and it's definitely the most expensive choice, but it's the best, it's the most advanced choice. I wasn't quite sure when they were speaking about let's say the 10% usage for training. That sounded like a very forward-looking statement. So I don't think we're going to see that, at least from what I was hearing. I don't think we're going to see that in the next year or so. It sounded to me like that's kind of the end goal, but they're probably going to be using most of their compute for training right now. At least that's how I interpreted it. But for the most part, it kind of came in with what I thought. I'm actually a little surprised that CapEx wasn't higher. As far as CapEx goes within this earnings cycle, they aren't spending that much money relative to their peers in the data center hyperscaling build out. And so, but for the most part, everything was kind of in line with what I thought, other than I think their revenues accelerating much faster than I would have thought at this point. And so I think that generally speaking, the top line looks very good.
Perfect. All right, everybody, historic. We all were there. First earnings call from SpaceX. It was across the board, seemed to be across the board positive. We'll digest it as we think about it some more. Appreciate everybody here. We've got the experts, the best panel on the planet here to talk about SpaceX. You got Aaron Burnett with the most detailed forecasting, Jeff Lutz, manufacturing, supply chain, factories, and connectivity. Connectivity about it. Communication is a big deal. Mobile is now a big deal. Alexandra Mertz on board and executive team. She knows this company more than anyone else. She's reviewed all the 8Ks. You got Larry Goldberg, who's basically an astronaut. He's both SpaceX and Tesla, big investor, but also, of course, analysis. Joe Techmeyer, no one knows space as he does. And then Ellie in Space. It's right in her name. It's right in her channel.
Yeah.
Check them out.
Thank you for including me.
And Jonathan. Thank you both.
Yeah.
Thanks, everybody. Okay. Bye, all.
Thank you.